Hello everyone, Nick Shaheen here, looking at Facebook. They just reported earnings and the stock's down 7% after hours. And this is my attempt as to make sense of it, and I'll share my opinion. But for disclosure, first of all, this is not a trade alert of any kind, and this is just me sharing my concepts and my levels. I'm a fundamental trader, but I use charts heavily. And I am not from Wall Street, so I learned all this stuff by myself. And if you want to learn it, there'll probably be a link down below where you can join. Okay, so disclosure again, I was long going into the earnings. I took a trade based on a bottom that I saw in a few days ago, shared it, and the trade was up 25 to 35%, depends on what somebody did. So I recommended that if somebody wants to go long earnings, that A, it's a coin flip open the next day, regardless of how good or bad the report was. It all depends on how traders perceive it. So even the CEO, him or herself, would not be able to tell you which way the market's going to go. So it's a complete crapshoot the next day. So you can't just take big time calls, say, bet $10,000 on an upside move. Might as well go to Vegas and put it on red or black. You'd have the same odds. That's my opinion. Now, longer term, you can decide differently and get some edge. So how do I trade with the fact that the options market are so inflated for this week when the event is happening? In this case, Facebook reported on Wednesday, today, in the 29th, and tomorrow morning it's going to open, and all the premiums that were in this week's contract are going to disappear if they're anywhere away from the actual mark. So it's going to be tricky for somebody to try to buy a lottery ticket for Facebook for this week's expiration to make any money unless they nailed it. So how do I use that? I would make my bet longer out in time, say for March or late February, and then I would sell this week's against it. So if I buy a call or a put, I would sell this week's against it into a diagonal or a calendar. So if you don't know what that is, again, the link is down below. So in my case, I bet up because I know for a fact that they're a monster in advertising. They're delivering results for their clients. The street is reacting to the number of, they call them DAOs and MAOs, monthly active users and daily active users. Who cares? They have like 2 billion. Literally, they have like 2 billion users. How many more users they can add? I read somewhere, what they say, like 80% of or half of cell phone users are Facebook users. I mean, you get to a point, you just can't grow any more numbers that way. But who cares if they have 1 user or 1 billion user or 2 billion users? They are growing their sales, and they grew their sales 25% year over year. 25%. A company this size, 25%. So fundamentally, it's not cheap. It sells at like a 30 PE, probably less now with this dip. And the sales, the number times sales is about 9.5. Oh, that's going to drop today, but maybe it's going to change. So it is not cheap from that perspective, but it's a growth company. So I don't really worry about cheapness as long as they're growing their top line, right? That's the measuring stick for a growth company. You pay a premium. If somebody has a business they want to sell you, if it's a stable business, doesn't grow, but just cranks, you pay it 1-2 times its sales. But if it's a company that's like Tesla, growing its sales like you wouldn't believe, or Facebook growing the sales like you wouldn't believe, and you want to buy their business outright, you don't say, let me pay you 3 times their sales. They'll say, I want 6 times, 9 times, 10 times my sales. So that's why there's a premium, and you don't compare this to Coke. It's not the same company. So to the reaction, I think it's a mistake. But they'll figure it out. But if I if I bought a diagonal, that means I have premiums tomorrow that are going to disappear in my favor because I bought a call out in time. I paid whatever, $5 for it. I sold one that paid $1.50 that expires this week. So whatever I lose on the one outside, $1.50 out in time, the $1.50 are going to disappear from the $232.50 call that I sold for this week. So that will be in my favor and offset the loss. So I'm pretty sure I'll be all right tomorrow, especially I have time on the clock. And I think, here's the important point. So there was a breakout I'm going to put the lines I drew. There was a pinch here, and I said two scenarios will happen. Either the trend will break, which was no reason for it, but I drew it anyway, or they'll break out. And they broke out, and once they beat this line right here, which is this exact failure point right here, 208, remember that number, 208? That's an important number. They broke above it, and the target is higher than this, but I was conservative by putting it right there because of, there's going to be resistance at 220-ish or 18, 19, right? That's a weekly chart. So zooming back in. So now they're falling after hours, and I believe they ticked at 205 was the low. Currently, I'm looking at it 209 and change. This doesn't show me after hours. I don't have that option for some reason. Sometimes it does, sometimes it doesn't. So I'm going to go to 120, and I'm going to show you why it's important that it stays above that zone. This was the neckline that served as a base for this last burst. Okay, so 7%, they're giving it back up. Exactly, 7% after hours. That's fine. If a breakout retests the neckline, I'm okay. The only caveat I have is that the whole market is at all-time highs. So if the whole market corrects, yeah, it's going to be lower prices for Facebook. But assuming that the whole market doesn't collapse tomorrow or the next week, it should find footing. So if I'm long it and I'm okay at 207, I shouldn't panic out of it, because this is normal operating procedure to retest the neckline. They break out, they retest it. So here they broke out and they retested it, and then they continue on higher. So it happens all the time, and it is part of normal operations. One doesn't want to see it, but it does happen. So tomorrow at the open, there's going to be a messy open. Some people are going to love it, some people are going to hate it, but the people that do homework on it, they're going to realize that it doesn't matter how many users they have. Let's see how much they're growing their actual income statement, which is the goal of being in business. If you're in business and you have 16,000 clients and you're losing money, is it better for that and not growing your sales? Or if you had 10 clients and you're growing your sales year over year 25%? I'm using extreme examples here, but that's the concept. So who cares? Really, who cares about users? All right, so it's important to shed the noise of the experts out there and just use common logic. There is an income statement for this business, regardless of what it's called. They're killing it. They're absolutely killing it. And why would you panic out of it? Especially if technically it's revisiting a neckline from which it broke out. So I'm okay if I'm long. I'm not panicking out of it. I don't own the shares, but if I own the shares and it comes back to this zone, and it's a zone, it's not a hard line in the sand, but if I were to pick a hard line in the sand, 203 and change, right, then I'm fine. And if it falls through it and the market's correct, 188 would be a place where I would add. On the weekly chart, I mean, it would take a big market correction for it to give up everything. All right, so this is the way I look at things. I'm not going to panic out of one thing or another. I'm not going to chase something or another. By the way, speaking of chasing, Tesla, I'm definitely missing a piece of that puzzle. 322, 325. $625 per share, something like that. Last time I checked, so it's insane rally. They delivered, beat top and bottom line, and guided okay. So, all right. So back to Facebook. I think they're reading it wrong. We'll see what happens tomorrow. We'll see what happens next week. But how I trade earnings is I definitely treat it as a lottery ticket. What does that mean? It means I don't bet enough money that's going to break my heart or to piggy bank the next day, because it is a coin flip. The reaction, the short-term reaction. The CEO could not tell us how they were going to react to it. So if you talk to AMD CEO 2 days ago, before they reported earnings, they knew what they're going to say. They couldn't tell you that they were going to sell the stock down 5% on a decent report. So it's all about expectations, and we don't know what the market expects. All right, next signing out. If you have any questions, also if you haven't subscribed, click on the YouTube channel. It's free, but if you want to learn more and be in the chat room, click on the links below. Total fun and pretty profitable.